Powered by Century Laminates and Century Ply.
Welcome back. So a little bit of a pullback. Let's see if it can sustain or not. But otherwise, largely speaking, today is a day of a big cool-off in financials. Mr. Tulsian, what would you advise on SBI right now specifically? I mean, we're looking at a price of almost 200 as the correction has been very swift today. But, where would you place it in the pecking order if someone wants to build a portfolio in the financials in this fall?
Maybe after HDFC Bank, I would prefer SBI because probably in the pecking order, ICICI and Axis Bank will fall maybe third and fourth place. So if you are an investor looking to buy the stock, present price is the good. And if you are as a F&O trader, I won't advise that you take the near-term view for the couple of days, but with an expiry view, it qualifies by. So two stocks looks good in the banking space. One is HDFC Bank, and since you have asked me the pecking order, second would be SBI at the current level, and third would be Bandhan Bank, and then fourth would be there on like other banks in the bank Nifty index. Yeah.
All right, Mr. Tulsian, we leave it there today. Thanks a lot for joining us. Deepak, I wanted your thoughts. In a bit, we'll go across to Nimesh as well on Bharti Airtel. This consistent selling that we have seen. It's a stock which became a consensus call 3 months back, 4 months back, and since then has just refused to rally. But at 510, 515, is this a buy?
Yes, I mean, Anuj, we have it, so we're as frustrated as anybody else. But the problem really is, I think the bets that it would do well were primarily on the fact that it would be one of the survivors, possibly because Idea is crippled somewhat. Reliance will take, Jio will take a substantial position, but they might still end up being number 2 in the pecking order over there. So you could still bet on number 1 or number 2. We personally have taken bets on both, but what has happened really in Airtel is there are lots of uncertainties. Reliance Jio has introduced broadband plans, one of which is very, very low. Airtel is almost one of the largest players in the broadband space, so that attacks one of its strong areas as well. But at the same time, I think, all these things aside, we will pass over all of this in the next few months. And then they will be able to raise prices a little bit, maybe not as much as Mr. Mittal wants, but somewhat lesser than that. The RPO should go up another 25-30%. And this is still a very favorable thing for Airtel and Jio, not so much for Vodafone. I don't think they will be able to play meaningfully. So I think this kind of a cut is probably more short-term than anything else. Probably there is some adverse news coming around AGR payment process or however it goes. But I would say if you're thinking 5 or 6 years, I think this and Jio will be the biggest beneficiaries of a boom in data and in telecom. So I think they're worth having in portfolios. They continue to be in ours.
Okay, Deepak, thanks a lot for your time today. Good talking to you. Let's move on then and invite our next guest on the show. We have Pankaj Tibrewal now joining us as our Alpha Manager. Pankaj, of course, is Equity Fund Manager and Senior Vice President at Kotak Mutual Fund. Pankaj, good afternoon. So, the small cap index before today's move was up 17% for the month, and the mid cap index was up 12% for the month. I think that's the kind of market which perhaps it needs this kind of fall that we have seen, and could we see perhaps a couple of more days of decline just to shake off the excesses?
Absolutely, Anuj. Since March lows, we have seen a V-shaped recovery in the markets. The frontline indices are up anywhere between 45 to 55%, and every month we have seen gains. I think from the market which was cheap in March, we have moved to a fair value zone, where on a 1 year forward basis, the markets are trading at about 21, 22 times. And I believe that tactically there could be a pullback in the markets. The reason on the hindsight we'll come to know, whether it's US election risk of trade, but there seems to be a decent amount of probability for a pullback and some excesses to be taken off. Also, if you look at tactically, we were overweight on equities as a house in the month of March. And probably we are advising our investors and our partners to be neutral on equities at this point of time.
Okay, Pankaj, good afternoon. Well, not easy to deploy more money in this market, right? When the on-ground reports don't give you overwhelming positivity and the prices on the screen keep running away. Before we got into this correction, I mean, I'm talking about today, there was a lot of flair coming back in the mid-cap and small-cap market as well. What do you make of things? I mean, is there interest coming in here? Is this a good time to be deploying a large chunk of your money towards mid-caps and small-caps?
So, Surbi, if you remember our conversation few months back, where we shared our market outlook, and there was a thought process that broadly over the next 24 to 36 months, broader markets look much better in terms of outperformance. To a larger extent, that thesis has started to play out. As I was telling Anuj, that in the near term there is a probability of market pullback, but if one takes a 2 to 3 year view, I think a large number of businesses which are going through troubled times and which will come out stronger probably will see their multiples expanding meaningfully over the course of the next 24 to 36 months. And our sense is that in a lot of sectors we are seeing consolidation playing out. There are 4 themes where we are positioned our portfolios, and all the 4 seems to be powerful themes as of now. The first theme probably is the China substitution play, which we have been talking about for the last couple of years when the US-China trade tension started, and it has got accelerated due to COVID. Globally, every corporation is re-examining their supply chains, how resilient, how robust it is. And from just in time, we are moving to just in case. And in many sectors, when we are interacting with the leaders and the entrepreneurs, we are seeing both the global supply chain shift as well as the efforts by the government in terms of Atmanirbhar actually starting to play out in many sectors. Mobile is one of them, APIs is another, defense is the third. You will see more actions probably on the consumer electronics and footwear, furniture. A whole host of sectors have started to see government action and support. And I think that theme is a very powerful theme. The second theme is the formalization of the economy, which started with demonetization, if you remember, but has got accelerated now post-COVID. And in many sectors, what we are observing is the smaller guys and the tail of that sector is having trouble, either accessing funds for working capital or supply of labor or supply of raw material, in fact. And that we are seeing that every leader in the sector, whether it's represented by mid, small or large caps, are seeing market share gains. And I think companies which will survive this cycle with stronger balance sheet and cash flows will gain market share tremendously. That's the second theme, big becoming bigger. The third thing which we are chasing or positioning our portfolio is the real economy stocks. I think for almost now a decade, the real economy stocks have been in trouble and they have underperformed the overall market. If manufacturing starts picking up in India, a lot of real economic stocks, whether it be capital goods in forms of pipe, bearings, or maybe at some point of time real estate stocks and ancillary sectors to real estate starts performing. So that's the third sector. And the fourth sector we are seeing is rural doing better than urban, which means Bharat doing better than India this year. And across sectors which cater to rural India, whether it be agrochemical, fertilizer, tractor, the demand momentum has been quite strong. So this is the way we have positioned our portfolios, and we have gone bottom up in each of these themes and tried to pick the best companies with the best managements, which can ride the growth path in the next 24 to 36 months.
Okay, Pankaj, stay on. I just need to address a very important stock and I'll come back to you. Look at the intraday chart of Bharti Airtel. Now, this is what we were alerting to earlier as well. Around the 3 p.m. move, there was supposed to be this MSCI rebalancing. Now, what happens is post 3 p.m., you see a bit of a reverse move. Now, first, Nimesh will tell us what all he has picked up in terms of how much selling has already happened, how much is left. Nimesh, tell us.
Hi, and so as everybody know that there is going to be a MSCI rebalance sell flows in the Bharti stock in the last half an hour of trade. What I pick up from dealers is the selling could be in the range of $500 to $550 million. But if you look at the stock performance in the last, say, 3 months, 1 month, or even since the date the MSCI announcement came on 13th of this month. The stock is underperformed. So to some extent, this was known in the market. It was priced in the stock as well. So maybe the last half an hour move in the Bharti Airtel will be important to watch out for. And that's exactly what even Morgan Stanley wrote in the note today morning as to how much of this is priced in. So according to Morgan Stanley, they maintain an overweight stance on Bharti Airtel with a target price of 725. According to them, the key catalyst to watch out was first, of course, is the AGR case, which you believe that could happen any time this week. So that's something to watch out for. The second big trigger will be the tariff hikes. There were a lot of media reports suggesting that come September, all the telecom players are likely to hike prices. So that's something to watch out for. The third is a market share gain. What comes in the AGR is still, we don't know, but that can have an impact on the market share gain for Bharti Airtel and the increase of revenues from the digital platform. So barring this MSCI sell-off, which is technical in nature, which is a very short-term headwind, these are the 4 or 5 important factors to watch out for the Bharti Airtel stock. But as I believe, in the last half an hour, you'll probably see that sell flows of close to $500 million in Bharti Airtel.
Okay, and you know what? Just look at the intraday chart. Now, the issue is that is some parts still left to be sold in Bharti Airtel. So there could still be one last bout of selling for all you know. But in the futures, you're beginning to see some short covering. Pankaj, do you have telecom stocks in your portfolio? Do you plan to add them? What's your view?
So we have been playing telecom through the largest telecom operator right now, and we have in some portfolios the second operator as well. It's a difficult sector, to take a call right now where, which way AGR dues will go, how the judiciary will go about in terms of asking the government to collect. So I think we are keeping our, positioning in these two, telecom operators rather than going to the third one.
Okay. Pankaj, moving to a different sector, you have a fair number of chemical stocks in your portfolios. I mean, there is Coromandel, PI Industries, a couple of others, Galaxy Surfactants, Alkyl Amines, to name a few. Lots of chemical stocks there. But the sector has rallied a lot. Now, what would your approach be if you have to deploy incremental fresh money coming in? And within chemicals, what would you choose? What part of it?
So clearly, chemicals is one theme which has worked very well for our portfolios in the last couple of years. We didn't know COVID was coming, but what we could see was the global agrochemicals. Before even COVID, they had started to move a part of their supply chain out of China to India. And I think it's a very large sector globally, $1 trillion plus sector. And India has a very minuscule market share overall. So I think from a demand perspective, when we are interacting with these companies, the demand momentum for the next couple of years seems to be extremely strong. However, valuations are factoring in a lot of that growth. Hence, incremental money is not being deployed in these names. And we believe that there may be some pullback in these names because valuations are no longer cheap. But from a demand perspective, I think next 2-3 years, most of these companies are very well positioned to ride the demand momentum.
Okay, that's fair enough. By the way, the markets at index level seeing some recovery. That you can see, especially on the Bank Nifty, we were down 1100 points, now down about 900 points. So there's been 200-point recovery. But on individual stocks, you're seeing quite a bit of selling. So Piramal Enterprises, Federal Bank, PVR. In fact, a lot of people thought that perhaps in this unlock, cinema halls would be included. PVR, is very precariously placed in terms of its, debt, etc. So obviously that's added pressure, but 9% down on PVR. Look at Shriram Transport Finance. That's a stock which had a big move on Friday. That's down about 9%. GMR, DLF, all these stocks seeing quite a bit of decline. Now, Pankaj, the one space where you've seen a lot of money being made is two-wheelers. In fact, you could add a couple of others as well in the auto space. But do you have two-wheeler names in your portfolio? I don't see too many. Are you not buying this theme yet? What would be your call on the autos?
So in our multi-cap and large-cap portfolios, we have been very early on the two-wheeler trade. And as I rightly said, that one of the themes which we have been positive on is Bharat doing better than India. And clearly two-wheelers is a part of that portfolio. Incrementally, when we are speaking to the auto ancillary companies and the dealerships out all across India, we are getting very positive vibes on the two-wheeler demand. And just to give you a few anecdotes, one of the auto ancillary we recently interacted said that the largest two-wheeler company is planning the schedule for next few months, which they haven't done in the last 5 years. The dealership is just having 3 to 4 days of inventory, and the trade has moved to cash and carry. These are all positive indications from a demand perspective. Also on the demand side, many companies out of Bangalore, which are IT companies, some companies out of Delhi, Bombay, they are preferring personal mobility over shared mobility. And they have internally introduced schemes for their employees that you buy a 40,000 motorcycle, 20,000 I am going to fund upfront, and the rest 20,000 you pay as a EMI over the next 3 to 4 years. So I think in the near term, both rural as well as the concept of personal mobility versus shared is leading to a pickup in demand on the two-wheeler side. And this is a space we have been positive on from a larger cap and multi-cap portfolios.
Okay, got that point. Pankaj, thanks very much. Always nice having you on the shows. Thank you for making time for us today. Let's get back to the market now, by the way, which has staged a very impressive recovery as well. So, I mean, for what it's worth, at least the cut isn't getting deeper, Anuj. I'm looking at TCS actually. TCS is rising to the top of the charts, providing some support. But what do you think? Would you even call this a recovery, considering the day that we've seen?
Surabhi, everything has to be looked at in context, right? Today's fall on the Bank Nifty, we have not even negated Friday's green bar. Let's not forget that. It's just because the rally has been so strong that the shake-off would be equally strong. Now, in one fell swoop, we have the put call ratio down to 1.19. We have the VIX, which is back up to 21.22. So let's see how this whole margin thing will also pan out going forward. But the market needed a shakeout, and you could have got any trigger. Today, this was the trigger, or whatever trigger, you'll ask 4 people, they'll give you 4 different triggers. So you can choose yours. But the markets, I think, are done, shaking off some excesses. And let's see if, it does that. But if, tomorrow onwards as well, if you start to see a declining trend and the market underperforming the global market, then perhaps, you'll ask yourself a question that whether more needs to go. But for now, I think it's just, today was just one day where the market just decided that enough is enough. Let me just clean out some of the weak hands, and then we'll take it from tomorrow.
Okay, well, that is the market for now. On that note, we do need to take a very quick break. We will come back on the other side, get you trades for a very interesting last half hour coming up. And also tomorrow,